Hi everyone, let's go over my medium time frame and low time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish and then bearish scenario, as we still expect more downside on this time frame to take at least a double bottom over here at 24.7k. Also, Bybit took this low over here with a big wick to 23.6k, and it is incredibly common to fill the whole wick, so 23.6k would then be a minimum target. But also the fact that Bybit already took this low increases the probabilities that all of the other exchanges and charts will follow. And as you can see on my Coinbase chart here, the low did not yet get taken, which leads to a double bottom. Now in this scenario, we are looking for a zigzag to the downside, which is a 5-3-5 structure. 5 waves in A, 3 waves in B, 5 waves in C. Minimum target for B is a 0.382, sitting at 27.8k, and there's some nice additional resistance at this level as well. If it passes this level, the next area of interest for me is going to be around 29.2k, which is also in the area of the golden pocket, which is taken from the high to the low of this wave 5. Now, if we then zoom in to the corrective structure of this wave B, and what I currently keep an eye on for this particular scenario is a WXY sideways double combo, which started with a flat over here in a wave W, double zigzag in X, and then I'd be looking for a zigzag in wave Y, because in a double combo, wave W and wave Y are not allowed to be the same structure. So W being a flat, Y can then only be either a zigzag 5-3-5 or a triangle, which also is of course still an opportunity. Minimum target for wave Y is usually at least the 0.618 all the way to the 1.236 is common, and the 1.618 is a more rare target, which is sitting at 29.5k, and the 1.236 sitting at 28.7k. It has to be said though that if we zoom in to the lower time frames and we look at this flat being then a 3-3-5 wave structure and an expanding flat ABC, this being a 5-wave move is not that great to count. Now, if it is a 5-wave move, we have to think about diagonals because of the amount of overlap over here. But if we think about a diagonal, what you can do as a little trick is use a channel and take it from the high of the first wave to the end of the structure, which then has to be your wave 5 in a diagonal, and then you pull it to the low of your wave 2, because in a diagonal this is your wave 1, 2, and then potentially like 3, 4 and 5. So you have some sort of another ending diagonal 5 over here. But the problem that you can see is that most commonly we have contracting diagonals, meaning the lower edge of the channel will not be hit, because once the channel gets hit at the bottom over here, we're not talking about a contracting diagonal anymore, but a potential expanding diagonal. And you can see the lower line of the trend line has been hit over here, lowering the probabilities that this is a diagonal for then a potential ABC structure, so a 5-wave move to the upside, increasing the probabilities this is a 3-wave structure and not a 5-wave structure, which in a wave W is not allowed if you start counting here and then an ABC, because then we have to think WXY. But a WXY in a W is not something that is preferred at all. Very, very uncommon, officially not allowed, but very, very uncommon, because we can't say 100% yes or no. But it's not what you want to see, and an expanding diagonal is extremely rare as well. So that lowers the probabilities of this particular scenario. Also, of course, one could think, well, what if we put the low of wave 5 over here in this particular scenario, right? This wave 5 and the low of A are moving to the right side, and then this is your first structure, and then a W, X, and a Y. But then the problem is going to be this wave 5 over here. This is a nice impulse to the downside, but this is very, very, very long compared to wave 2, and then a 1, 2, 3, very long 4, and a 5 doesn't count nicely at all. Looks very 3-wavy indeed. If we look at the medium time frame, more bearish scenario actually in a WXY, then potentially in this scenario the high's already in and we'd be looking for downside. So a WXY is a pattern where all the waves are 3-wave structures. ABC in wave W, any corrective structure in X, and then you'd be looking for a Y. Now I'm keeping an eye on a double zigzag, which is an ABC zigzag in W, correction in X, and then another zigzag in wave Y, another 3-wave pattern, and then a sharp zigzag. So not a sideways double combo where W and Y are not allowed to have the same structure, but in a double zigzag you also label the two zigzags as a W and a Y. Now preferably this trend line is broken during a double zigzag, which it has done now. As you can see over here on the 12-hour chart, candle closed above, trend line has been broken. That's exactly what you want to see for a double zigzag, or potentially a double zigzag. And also the 382 has been hit over here with the first move to the upside for then a potential X looking for a Y to the downside. If we look towards the downside, then currently the common target for wave Y, being the 1 to the 1.236, is sitting between 21.7k and 20.1k. Area of interest, because just above the 1 to 1 we have a target box over here which is sitting between 21.8k and 22.6k, and just around the 1.236 we have another one between 20.2k and 20.6k. Now, if you then look at this scenario, it matches with the psychology scenario, right? The medium time frame bearish scenario, WXY, matches with the psychology scenario where we get a fake out of the trend line, undoubtedly a trend line many people keep an eye on, faking out, closing above over here, maybe even a little back test, a little bit of a range, and then eventually fall towards the downside, which baits the breakout traders over here as well that are looking for long positions as the trend line is broken after basically one retest, two retest, and now the third time it's passing. This could be interesting, right, for a move to the downside. Now, inside this wave X, one of the scenarios we keep an eye on for a while already is a triangle over here. Now, in this particular triangle, we're then looking for an A, B, C, D, and then a wave E. Now, especially the end of this triangle is not something I'm necessarily a fan of. Look at the volume as well. It's increasing in this wave E, which is usually not really something you like to see in a triangle, as usually the volume is decreasing in a triangle. And actually all the way up to D, that was also the case. This is volume A, and then you can see the volume went down very nicely. But then over here, inside wave E, that's when the volume started increasing. So that's something we have to keep in mind. The invalidation is, however, very, very clear. That's the invalidation, the high of wave C. In a triangle, E is not allowed to go above C. The 786 is a common target for a wave E as well. The upper trend line has been hit, the AC trend line here, which is good as well. 4 out of the 5 waves being zigzags. Well, A, B, C can be zigzags, D in a double zigzag, and then you want E to be another zigzag, which is possible if we count as A, B, C, maybe take the high once more, but only wicked because you don't want to hit the invalidation over here. But this is then an A, B is then a running flat, very rare, and then a wave C to the upside where we'd then be looking for 1, 2, 3, 4, 5 to finish it. Maybe take that high once more, not reach the invalidation, and then fall to the downside for lower prices. Another triangle that I think is quite interesting is a triangle from Jay-Z in the group from George. So he was looking at this whole structure. I know it's a lot of information out of nowhere, but basically he zoomed out to the 8 hour all the way over here since the first time we had 31k, and he's looking at a potential WXY. This is his bullish scenario, by the way. He also has the bearish scenario, which is the triangle I just showed you. But in the more bullish scenario, he then has over here a potential triangle in a wave Y. Then look at the yellow count, ABC in a wave A, ABC in a B, C, D, and E. E is in, looking for upside, which is then an impulse. And if we zoom in to that final structure, his triangle, then we have over here an ABC in A, then B, C, D, and E. And E is then a double zigzag, finishing over here at about 26k. And this is then the beginning of an impulse to the upside, which he then labeled 1, 2, 3, 4, 5. I think this is a very interesting scenario, and I at least wanted to mention it. On my chart, however, this low over here did not wick low enough, as he has this a wave A, B, C, D, E. My C went below the low of then a wave A, as many other charts have the same problem here, which is officially not allowed with a triangle. But on his chart, it works because of the dip he has over here on the OKX chart. But yeah, it's at least a scenario I wanted to share. You can keep an eye on it if we, of course, continue pushing. But currently, the bearish probabilities are still higher. We also have over here still the bearish CVD divergences. Usually you hear me talking look at the CVD divergences on the right side of a new high or a new low. So take this one with a grain of salt. We had to move to the downside. And what I think is important, however, is that we did not have bullish CVD divergences between the low and the higher low over here. We did not have a higher low in price, but a lower low on the CVD. If I go to the 4 hour, you will be able to see it as well. Over here, higher low in price, but not a lower low on both of the CVDs or one of the CVD lines. And if this is the moment of reversal and we go back to new highs at 32K, I really want to see absorption of market shorts. I want to see bullish CVD divergences. Is it an absolutely like a requirement? No, but the probabilities you see CVD divergences between the low and the higher low created for a bigger push towards the upside is very, very high. So we didn't see that, and yeah, that also increases probabilities for me that we're not yet finished with a potential move to the downside. If we then zoom in more locally, as you can see, I don't necessarily have a micro count on the chart, but I do have some interesting things to say. First of all, an important area of support is the support resistance area over here. Very simple, just as simple as our level between 26.7, 26.8. You don't really want to dip below this level. You can see it was resistance multiple times. Can act as support, right? But if you fall below this level and start to close here, well, you get inside the bottom range again, which would be bearish. Another thing is that I put the 0.5 fib on the chart, and that has to do with a potential wave 4 if we're looking for like a 1, 2, 3, 4 and then a wave 5. Preferably you don't see candles closing below the 0.5 sitting at 26.8k, which would usually invalidate a wave 4. Now, a wick below and closing above is fine. That has to be said, but you don't really want to see candles close here because then in a potential 1, 2, 3, 4, 5, it doesn't look good. Also, if we look at the volume, then the volume currently during this move to the upside is in the high. So if you look at the high and I go straight down, you can see over here the volume, the highest amount of volume is in the high. That's something you don't want to see if you're bullish. In an impulsive structure, you want the highest amount of volume to sit inside a wave 3. Then you want to have a wave 4, volume decreasing. And then you want to see another high to be made on lower volume. So a higher high, but on lower volume. That's preferably what you want to see. Something else I also like to mention is that inside a wave 3, you usually at least want to be able to count 5 waves as well. So like a 1, 2, 3, whereas 4, and then eventually 5, where the high never has the highest amount of volume. So yeah, for the bulls, it's just very important you take this high. For the bears, this could be also still a 3-wave structure. Very interesting, of course, but in a more zigzag for a potential wave E. This is your A, long B, and a wave C. Well, C is a 5-wave structure. So another move to the upside to take this high is still valid for the triangle scenario, but keep an eye on that invalidation level over here at 27.5k. If we now look at the CVD divergences locally, then we had some bullish CVD divergences over here, higher low in price, lower low on the CVD. However, these eventually got countered with building bearish CVD divergences throughout the night for me, lower high in price, higher high CVD, and then it happens once more, and now this low got wicked over here, which invalidates the bullish CVD divergences that we had. And now over here locally, little bullish CVD, but that already played out as this high got taken. And we do have a bearish CVD over here. If we zoom in to the 5-minute, then you can see lower highs on price, higher highs on yellow, right? Bearish CVD divergence, but then again, lower high on price, but again, a higher high on the CVD. So that's a bearish CVD divergence. The invalidation is taking this high over here. So the invalidation would be taking this high. That's step 1. And it played out if price takes this low over here, right? So that's something we have to keep in mind. And of course, this high in particular had already 2 CVD divergences, so this could be the 3rd one. And the more often you have a CVD with the same pivot, the lower the probabilities of it playing out. So I'm very easy. It's a nice little range, looking for more information, see what's coming our way. If we look at the news, then we have a news today, 2:30 p.m. Central European Time. High impact news, the red flag could lead to increased volatility, so make sure you trade safe. And if we then zoom out, go back to the 12-hour time frame, look at the probabilities of the different time frames, then on the medium time frame, the probabilities are still higher. We're going to be looking for downside to at least take the double bottom at 24k or fill the whole Bybit wick as a minimum all the way to 23.6k. On the low time frame, currently the highest, I suppose, probability is the triangle till invalidation, which is over here. If the invalidation is hit, I'm still looking for a three-wave structure, and we have to observe what's going to happen also throughout the weekend, which of course is approaching, which tends to be very rangy. So I'm curious what's going to happen today if we get any big pushes just before the weekend starts towards either the upward or downside. And finally, more locally, it's very simple. Keep an eye on the 0.5 Fibonacci, the support resistance area just below price, and the high, because you want to see a new high on lower volume as well. I want to tell you that at 1 p.m. I very likely can't make an update, and maybe 7 p.m. as well, because I'll be out for most of the day, first for other business at 1 p.m. and then I have friends coming over from overseas for tonight, so I'm not sure how I'm gonna manage that with the content, but at least I prepared you here at the end of the video. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.